Oil technical analysis November 3rd. As you can see, the candle from the November 2nd, the session on Wednesday, really didn't produce much. It did pop above the top of the hammer, which would have triggered longs had you taken that signal. The hammer that was sitting at 90 that had formed on Tuesday, but really not much out of it. We popped up, came straight back down, and when you get conflicting bars like this or candles like this, quite often it means that you're going to enter a tight consolidation range. Not surprising after all of this move up, the market would need to rest regardless of which direction it wanted to go, quite frankly. So we expect very little action in the light sweet crude market and are probably going to remain flat of it, at least for until we get out of this cluster here and decide if we're above 90 or we're below it. In the meantime, we just sit here and wait. It's probably the prudent thing to do when you start to see these kind of conflicting signals. Looking at Brent, it's the same thing, except for it's a little bit more extreme example as the Tuesday candle. The top of it definitely got busted, and we went straight to the first sign of resistance, fell, and formed a shooting star. This does look like consolidation waiting to happen. The fact that it went down so far, it popped up, and then it went down again, has me believing that it might have a little bit more of a downward bias at this point, but consolidation is probably the first step. So as such, it's going to be a scalper's market at best. And until we get a little bit better and more clear signal, it's going to be very difficult to trade this market as well. So we're probably going to be flat in the Brent market for a day or two as well.